right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast, episode number 12. Today we're going to talk about why invest in Paterson, New Jersey. So Mr. Martinez, my business partner, and I have been very ambitious on Paterson, New Jersey. We've invested there now for years, and we're really putting a lot more capital in that city. We see a lot more momentum, and the numbers speak for themselves. So we're going to go over that today. For about 15 minutes, we're going to talk about the market there, some cool developments that are coming in, some really interesting changes in the Paterson market, specifically here in Paterson, New Jersey. We're located in Berkeley Heights, New Jersey, of course, and if you want to learn more about how to get invested passively in New Jersey apartment buildings, go to peoplescapitalgroup.com where you can input your information, maybe come to one of our seminars, our webinars, or of course just set up a time you can learn more about our upcoming opportunities here at People's Capital Group. But let's jump into it here with Paterson, New Jersey. So simple numbers here. I went on Zillow.com, which is a wealth of information. These days with the internet, you can really just find out so much about a property from the comfort of your home. So about 6.8% is the estimated growth for the upcoming year here on Zillow.com. So that's a good sign. And then last year, there's an 11.3% increase in home values in Paterson, New Jersey. So the property values are increasing last year by 11.3%, which is phenomenal, much higher than the industry average, the country average, and also the projections for next year are good as well. Now, we do buy apartment buildings in Paterson, New Jersey, so home values are not a direct reflection of apartment building values, but they really do impact it because, of course, the more expensive it is to live in an area, the more expensive it is to rent in an area generally, right? So as home values increase, as does rent, and those numbers also speak for themselves. So some of the general numbers are in the metropolitan area, New York City metropolitan area, which Paterson is in, all the cities right around New York City that get you into Manhattan, where a lot of people live, because most people that work in Manhattan don't live there, they actually commute there. So these areas are huge demand, and Paterson is really one of the cheapest, most affordable places to live if you're commuting into Manhattan. Forget about the boroughs, Bronx, Brooklyn. Those are so expensive right now. You get such a small space for your money. Even in Hoboken and Jersey City, those are cities that have really flourished. And at this point, those values are so much higher than Paterson. It's so much more expensive to rent there or buy there or live there that people are moving into Newark. And then Newark had a boom. So Newark, New Jersey, yes, there's a lot of crime there. And the schools have challenges. The famous Mark Zuckerberg put $100 million into the Newark schools, and unfortunately, about 75% of it was sucked up by bureaucrats and fees, and it really didn't have the impact we all hoped it would. But we do thank philanthropists like that, and unfortunately, I think a lot of the gridlock in Newark with the government officials caused those schools to not improve enough. But Newark has seen a boom. We've invested in Newark for years, and we really have done very well in downtown Newark, Rutgers area. That's been a great place to park our capital and just watch our investments grow over time. The demand in Newark and around the universities in Newark is great. So that change has really taken place there. And the next thing to change, in our opinion, is Paterson. You can already see it happening. The numbers speak for themselves. Home values are really growing very quickly there. And, listen, there's certain statistics. The schools aren't great, right? There's high crime. I get that, it's an inner city area that, there's areas of Paterson that are dangerous and you don't want to invest there. And you have to understand that about every city. So you want to recognize there's areas where there's a lot of redevelopment. The city's very bullish on redevelopment, generally the downtown areas near the parks, and same things going on in Paterson that you saw in Newark over the last 10 years. There's a lot of investment coming into the downtown area. There's nicer housing coming in. There's fancy condos and apartments coming in with swimming pools. Right now in downtown Paterson, they are developing a 10-story, 206-unit apartment building here with swimming pools, and this is going to be right in downtown Paterson. Awesome location. We're actually looking at a property around the corner on Straight Street, and so we are Really bullish on this area. There's a lot of developers putting a ton of money into the area as well. The Armory, the Old Armory in Paterson. Paterson really has a lot of history. It's a very interesting little city with the Great Falls there and everything. Very beautiful city with a ton of potential, and it's really being tapped into right now. So with that Armory, you have an Old Armory and right near around downtown Paterson. We're buying an 11 unit right around the corner from this building, and there's been a proposal that looks like it's going to be approved here for a number of apartments right at the Old Armory. Unfortunately, the building has to be knocked down. It's an old beat up building there, so it's not safe to be used as to transform into apartments, but a new building will be built there, and the condos will be higher level, earning higher rents than what we're charging. So what we do is we buy buildings around these big fancy developments, because we know that these developers put a ton of money into research, and so do we, but they put even more. The amount of research and due diligence that development companies go into to research an area before they put all that capital into it, because a lot of these big developments, it's institutionalized money. These are hedge funds, these are family offices, these are savvy investors that are putting their capital into safe markets where they see growth. They see this as a more affordable option, a cheaper place. It's just that it's a cheaper thing on the shelf, right? If you're a real estate investor and you're looking at New Jersey here, you're looking at the New York City metropolitan market, you're looking at the boroughs, you're looking at Long Island, you're looking at Newark, you're looking at Hoboken. And at the end of the day, Newark's a great investment and Paterson's a great investment right now for cash flow and for growth. Hoboken's very saturated. Jersey City has a ton of activity. I still am very bullish on Jersey City, but you kind of missed the boat on Jersey City. At this point, it's such a high-priced city to get into a lot of good areas of Jersey City. It just doesn't make sense unless you really have your ears to the street, which is the name of the game, to get good deals. But here in Paterson, we do find that there's a lot of bang for your buck. Your dollar goes further. We're buying apartment buildings right now. We're paying about $87 per unit, up to about $125 per unit for nicer buildings right now. And it's not like brand new construction, fancy apartments, but we're getting nice Class B real estate and Class C real estate for the 87,000 unit. So you pay for what you get, but you get your dollar goes further in Paterson than it does in many other areas of North Jersey. Okay, so Paterson's a much better place to stretch your dollar and get more apartments, better return on investment by getting more apartments for less money here in Paterson, New Jersey. So we follow those developers. We try to buy buildings around where these fancy developments are happening, and we're doing that right now. We're buying a building near the Great Falls, a 25 unit there, where there's a ton of development going on, a very beautiful park. A lot of money's going into that park there as well. And then we also are investing in an 11 unit by the Armory, where it's being redeveloped. If they can get their parking situation figured out, that development's going to be pushed through, and then that's going to get started as soon as possible. So, the rents right now in the metropolitan area of New York City are $29.50. That's the average, rent per month in the New York City metropolitan area, the boroughs, Hoboken, okay, and the average rent in Paterson is $1,600. So, $29.50 versus $1,600. Obviously, that's almost twice what Paterson is. So, the rents have room to grow, in my opinion. I'm not even asking $1,600 for our rents. We're looking at buildings right now. We're analyzing our average rents around $1,250 to $1,350. So that's a much more conservative place to be. If I got $1,450, oh my gosh, that would be amazing. The building would really just cash flow far better than we even thought. So we're being pretty conservative on our numbers, and the average rent in Paterson is higher than what we're asking. That's a good indication often on your properties. So, you want to kind of be a tick above that average rent in the city, because that way you're going to be a more affordable option for tenants, and you'll have a line out the door to lease your units like we do in these cities. And let's also talk about the median home price. Okay, so the median home price in New Jersey is very expensive. The median home price in Paterson is $256,000, where the median home price in Fairlawn, which is literally neighboring Paterson, is $403,000. So Paterson, it's a better bang for your buck. The average U.S. rent is $1,550. I'm asking less than that for most of my units in Paterson, New Jersey, because I don't have to pay that much for the real estate. If I could pay less for the real estate, I can charge less for the rental space, and I can build that rent more over time, therefore showing a nice growth pattern and being able to increase the value of that real estate exponentially. So when you buy low, rents are low, there's room to grow, you're in an area where there's a ton of demand, there's so many people living in North Jersey, living around New York City. It is such a densely populated area. That's why I try to get away on the weekends, because it's just a pain living in New Jersey. There's so much traffic, there's so many people and congestion. But there's a ton of wealth, there's a ton of business activity, there's a ton of opportunity. Everyone's hiring here. We earn very nicely in New Jersey, and so because of that, people can afford to pay higher rents, and houses sell for more. The income level is very high in New Jersey, very strong numbers there as well. I think we're like number 3 of household income in the country here in New Jersey. So because of that, our home value stays strong, our rent stays strong, the demand for the space is high, and therefore the values of the real estate is high. So when I buy a building, I can be confident that 5 years from now, or 10 or 20 years from now, or 30 years, someone's going to want to buy that building. A lot of syndicators go and buy in areas that are up and coming, and I totally understand that, and there's definitely sub-markets where you can really do very well if you get in soon and then they boom and then you get out. But those sub-markets aren't really a long-term strategy all the time, right? A lot of times you're looking at these sub-markets, you're like, all right, it's going well right now, but if another recession happens, some of these lesser known cities are going to get hit first, right? Where New York City, this metropolitan market, is really just a hub of so much activity that when the market slows down, not if, but when the market slows down, there's still a demand to live near New York City. And if there's not a demand to live New York City, I always say we have bigger problems to worry about than our real estate values, because that means there's like some terrible crisis going on. So as long as there's not some terrible crisis that completely collapses the economy, we will be safe here working off New York City. That's where I place my cards. That's where I place my bet. And that's where I encourage my investors to do as well. We've done very well here as well. The numbers speak for themselves. So if you want to learn more about how you can invest in buildings in Paterson, New Jersey, or other neighboring cities where we get great buildings that have low cash flow and we're buying at a low price, but we increase the cash flow, we increase the value, and our investors make really nice returns through the cash flow and through the refinance of the building over time. So that they beat the tax man, they don't have to pay income tax, they make really solid double-digit cash-on-cash returns, but most of our investors don't have to do anything. So it's a completely passive investment in New Jersey apartment buildings. If this sounds like something you'd be interested in, you want to learn more about it, go to peoplescapitalgroup.com and fill in your information there. We'll get in touch with you, and you come to one of our events here in New Jersey. If you're not local, then we can connect, of course, through the amazing internet. So that's peoplescapitalgroup.com. I'm Aaron Fragnito, co-owner of People's Capital Group. You enjoy your day. I hope you enjoyed this video. Subscribe for more.